This is the London FinTech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London FinTech Podcast, episode 88, very auspicious to the Chinese, brought to you in association with Blue Motor Finance and Smart Pension. More on that anon. And I'm delighted to be joined today by Adam Rimmer, co-founder of Floodflash, to discuss parametric or event-based insurance. What is that, perchance you ask? Well, so did I. We set this up some time ago. I think I was rather thirsty at Balderton's InsureTech evening, and Adam struck the right balance of banter and hardcore, and never mentioned the word parametric to me at all, just far simpler, shorter words. Anyway, at this point, I always turn to that gospel of deep FS relevance, or at least education for the masses, Wikipedia. However, even this left me bemoaning all those neurons who long ago packed their knapsack and left. See if your neurons are up to the job. Wikipedia says, parametric insurance is a type of insurance that does not indemnify the pure loss, but ex ante agrees to make a payment upon the occurrence of a triggering event. The triggering event is often a catastrophic, natural event, which may ordinarily precipitate a loss or a series of losses, but parametric insurance principles are also applied to agricultural crop insurance and other normal risks, not of the nature of disaster, if the outcome of the risk is correlated to a parameter or an index of parameters. You what? I had no clue what that meant at all. Okay, so let's turn to Floodflash. Floodflash. Customers receive a pre-agreed settlement as soon as the Floodflash sensor detects that waters have exceeded a critical depth. An algorithm is used to set tailored prices, meaning that for the first time, personalised and competitive flood policies can be written for the highest risk locations around the world. So by the looks of it, this kind of insurance means that you get a few quid if the waters in your house rise to a certain mark. I wonder why Wikipedia didn't say that. Also, as somebody who literally lives on the peak of the last of the North Downs before the London Plains, why should I care as no flood is ever going to reach me? At this point, I will stop tossing the coin, wondering whether parametric insurance is trivial or something for Einstein, and start talking to a man who knows. Plenty to talk about, so let's get on with the show. Hi Adam, thanks for joining me today.
Hi Mike, thanks for having me. Really looking forward to it, and thanks for the descriptor of the right balance of banter and hardcore. I think I'll be dining out on that one for months.
Yes, indeed. Well, I think you should also sort of be spending some late evenings doing whatever it takes to change Wikipedia to something sort of comprehensible.
Yeah, absolutely. It's on the to-do list.
And it's probably not the moment to say that actually you were the guys who wrote that in the first place, because that wouldn't be a good start to it. So I'm always looking at sort of interesting ways to start. And last week, Louise Beaumont on Open Banking kicked off with Satanism. And one of your suggestions was death, but there's a bit of a sort of heavy tone, having had a couple of long days at Lendit and in Canary Wharf and long evenings consuming sort of wine and gin for the cause. So we thought we'd talk about the world instead, because you've been there and you've lived there apparently.
Yeah, absolutely. I've sort of been quite lucky, and over my time I spent sort of 6 months living in Sydney, I've spent 6 months living in New York, and also my co-founder Ian, much more interestingly than me, actually spent sort of 6 months living on the Greenland ice sheet while he was doing his PhD. Yeah, so we've seen, especially over in the States, like the impact that all sorts of disasters and all the rest of it can happen. So I bring some nice relevance to that today.
I wonder whether you sort of going back to disasters, like when England loses to Australia at cricket, is that a sort of event-based insurance? Is that parametric or non-parametric?
Yeah, absolutely. Well, given the sort of Ben Stokes' recent antics, I think we're offering some slightly different odds on that these days. But absolutely, that is indeed a sort of thing you could offer a parametric coverage for.
I see. So parametric, I mean, maybe we should just dispose of this now. Parametric is just a sort of a nerdy, techie word for something.
Yes, it's event-based.
It's an X, basically.
Exactly. It pays out based on an objective, measurable event, and it's really that simple. So your sort of Einsteinian IQ isn't really required at all.
So going back to old-fashioned things like life insurance, so if somebody dies, that's an event or a parameter to you nerds, computer people.
Absolutely. So, I probably owe you an apology at that point, Mike, because I know in the past I sort of told you that we were doing something really new and interesting. But the reality is that parametric insurance has been around for centuries because, at its essence, that's what life insurance is. It's insurance that pays out in an easily measurable event, so your death. When you die, No loss adjuster comes around to your house to work out how much your death has cost your family. But your insurance company doesn't write to you and say, sorry, we consider that actually your death was pre-existing damage. There are no arguments about which parts of the death are covered and which parts are excluded in the small print. They just pay you. And that's what we're trying to do at Flood Flash.
Yes, although like most things, the more you zoom in, going back to Satanism and death, one of your events on a picture was saying, which we'll sort of gloss over because you're clearly still alive, which is good news. I'm reminded of the fact that actually it's not that clear when people have died actually medically, NDEs and people coming back to life. And also I think way back in the day, coffins used to have little bells in. Because sometimes people weren't as dead as they appeared or something like that.
I believe in Victorian times you could pay a lot for the installation of a little wire in your coffin that would raise a little flag by your headstone to show everyone that you were still alive.
Maybe you need an app these days.
Yeah.
You want to be buried with your phone.
Absolutely. Well, if Flood Flash doesn't work, that'll be our next business.
Right, okay, that'll be the death of you. Oh, dear, groan. Right, okay, well, moving on from Sydney and New York, you're now in London, and so what kind of career journey led you to where you are today?
Yeah, good question. So as, when I sort of graduated from university, I was wondering, like a lot of us do, what on earth I wanted to do with my time.
I'm still wondering with my life, actually.
And a friend of mine who's a couple of years older that I knew from university was working for a company called RMS, who they build computer models of like earthquakes, hurricanes, even like, terrorist attacks and pandemic diseases and things like that.
And you were a fellow natural scientist.
Indeed.
In the sort of East Anglian region like myself,
Absolutely.
But a little bit later.
Yes, indeed.
What did you do in your part twos?
I studied cell biology, basically,
okay.
Genetics, so particularly relevant for flood insurance.
I was made to do that in the first year, actually. I was sort of rather outraged to find when I went up that natural sciences involved doing more subjects than I was doing at A-levels, which was definitely
it's quite a bit of a shock to the system. What did you do for your part two?
I went up intending to do physics, but then I found, to my complete outrage, that they had 9 o'clock lectures a week, and there was no way I was going to put up with that kind of obscenity. So I changed to something which I hadn't actually caught on that much in the time, 1981 actually, computer science tripos, because that had lectures starting at 10 o'clock. And I thought it was a bit more achievable to get up at 10 o'clock,
Very sensible risk management.
And I didn't actually think that computers would catch on particularly, but yes, that was the main reason, actually. So cell biology has prepared you very well for the world of insurance.
Yes, absolutely. Yeah, so this chap I mentioned got in touch and I, wondering what to do, had a look at RMS's website and it looked like quite a cool mixture of like science and finance. And it all started from there, really. I certainly hadn't sort of grown up or gone through university thinking I wanted to end up working in insurance.
It's funny, actually. Everybody's on the show in insurance always has to apologise for being in insurance, actually.
Yeah.
They say, oh, well, of course, when I was young, I never really wanted to be in insurance. And no one actually does, but I am in insurance now. Which is strange, actually, because funny enough, sort of bankers or fund managers or other people like that, they never actually apologise for it. There's something strange about
clearly
insurance.
Something in a personality type, clearly.
Yes, it's obviously got a reputation for being a bit sort of dull or something, but clearly sort of clever clogs like you have gone into insurance and come up with these clever models we'll talk about and pricing risk and all that kind of stuff. Before we sort of dive into the parametric insurance, though, wearing my risk hat, one of the core philosophical problems that led to 2008 was the flood of clever people into banking.
Yeah.
John Kay, who's been on the show some time ago, says that when he started his career, I think it was the late 60s, early 70s, it was only the stupid boys at school who went into banking.
Yeah.
And by the time he was a professor at Oxford, it was the cleverest boys that went into banking. And he rather felt, actually, that banking was much better when the most stupid boys went in because they knew they were stupid. Whereas one of the problems that happened, obviously increasingly over time on the banking side of things, although insurance has also had its sort of interesting times over my career in the city, was that all the extremely clever boys who did well at school and did well at university and were really good at sums and could play with computers, they made a category error in realising that, we just briefly talked about the world at the beginning, the world, what's actually happening is what's actually happening. Your model of it is your model of it.
Right.
And they ain't quite the same thing. And that's what blew the whole world up in 2008.
Yes,
basically.
Absolutely. And, we, having spent both, Ian and I between us have spent 11 years working with catastrophe models, and Ian's my co-founder. And, between us, we are always, the first to say that models are not reality. And it's very easy for people, particularly if you're working with, catastrophe insurance and that sort of thing, to press go on a model and assume that what comes out is a representation of reality. But it is not, and they have to be sort of treated with caution as such.
Yes, I mentioned Lendit. There was a panel chaired by Ryan Weeks yesterday on fully automated underwriting of lending decisions by platforms, and you can imagine the usual dynamic. There are the people at the tech end, and depending on the market you're in, we've got so much data, the computers are better than people who are fallible, yada, 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 and everyone's saying, well, everybody uses models of some sort, even your old school sort of credit manager, even if it's just, not lending to people with beards or lending to people with beards or whatever. But I asked the question, or rather I made the point, that models, by definition any model you're using, is generally quite a good one. But you hang around it long enough, the real world changes. I don't know, Catalonia leaves Spain, or there's a new civil war, or Brexit happens, or something that your little computer doesn't know about, and it's going to be quite hard to tell it about Brexit or something like that. And there's a discontinuity in the real world, at which point you really need the wetware, you need the human being standing outside and go, whoa, hang on, this has happened and our model never knew about it. And that sounds like a trivial thing, but when I was running the risk at Clements, we had a very interesting situation in 1995 in the States, when the Fed suddenly jumped rates by 2%, and we had a huge exposure via a sort of JV in America to a fund that was very, very model-driven, and its models did really well until they suddenly lost a fortune. Yeah,
I think that's absolutely right. But one of the things a lot of those models have to try and deal with is human behaviour, and that's one of the things that is inherently very, very difficult to model. Catastrophe models of the sort that we dealt with in our past life and that we're dealing with now with flood flash, you're dealing with physical events, and these modelling companies have these sort of armies of scientists in California and in London sort of putting together these models. The human element of insurance comes in with the financial loss. You don't know sort of what equipment is in what area and how much therefore the loss is going to cost you. And parametric insurance takes out the human element of that.
So sticking with this interesting thing, just sort of generalising before we sort of dive in a little bit more, about modelling, and as you rightly point out, for the sake of argument, if you're modelling interest rates, then you might naively think you're modelling something abstract, but actually you're not. You're modelling whoever it is, for the sake of argument, the 10,000 people in the world who have some relevance towards setting interest rates, and whether they all wake up full of fear or full of greed and all these kind of, it's like a social phenomenon, really. You quite rightly identify that in terms of catastrophe insurance or disaster insurance, actually you're not modelling, in a sense, human behaviours. You're modelling, I don't know, sunspots and the winds and all that kind of stuff. And one of the modelling challenges in that context is that the world ain't a fixed thing.
No.
New York is still where it's been for some time, and Sydney is still where it's been. But as we all know, and as has got incredibly politicised in terms of reporting by newspapers, some people believe that the climate's changing massively and disasters are going to go through the roof and yada, 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 and some people say it's exaggerated. So even when we think in a kind of this scientific fashion that there's some objective phenomenon out there and all we're doing is modelling the phenomenon, actually there's quite a lot of sort of social science in it as well. There's a sort of taking a view on what's going on.
Yeah, particularly if you're talking long term, the sort of horizons that we're looking at climate change in. Yeah, absolutely. And you have to take these into account with the models as well. Sea surface temperatures, for example, have like a very measurable effect on hurricane formation and things like that.
Okay, well, we'll come back a little later to your sort of segment within this parametric insurance world, because, as you say, long-tail liabilities, for the sake of argument, let's say insuring the whole Caribbean against hurricanes for the next 50 years. Yeah. That's one kind of model. Insuring my house against being flooded tomorrow is a different kind of model. So you like this parametric word because you're clever. I'm a bit stupid too. I think sort of event-driven insurance sticks in my mind a bit more. And we touched on life insurance as an example of something which formerly you would stick under the category of event-driven or parametric. What other examples of insurance will the average listener have heard of that comes under your umbrella term?
So, life insurance we've talked about. The other one, and given that when you say average listener, I'm sort of assuming the average listener.
My average listener is extremely clever, and there's a lot.
FinTech podcast, yeah. So weather derivatives have been used by farmers for decades to sort of hedge against their risk, and that ultimately is a form of parametric insurance. Like they can buy a product that basically says if winters are below a certain temperature for a certain number of days, or if rainfall falls below a certain amount over a number of months, then they get paid. And they're just use that as a hedge against the risks that their business faces.
You say it's been around for some time, as I've got rather less hair than you. I certainly remember a time when the derivatives weren't around, actually, let alone weather derivatives, which one of the sort of the later ones to be formed. What are the origins of these kind of instruments or types of insurance?
They came about because of the difficulty of quantifying certain risks. That is why, and that's, ultimately life insurance, it's very difficult to quantify actually how much somebody's life is worth. So the person taking out the policy says, right, I want, for example, 200 grand of cover. I'm a 56-year-old non-smoker, and therefore this is your premium. And it becomes a much simpler, much more objective way of insuring things that otherwise you wouldn't be able to cover.
So one of the things we're pointing on there, which is that this event-based insurance, this parametric insurance, has a fixed payout. which must make it incredibly simple compared to other types. So, for example, talking of floods, I mentioned when Neos were on the show a little while ago who insure your home, and they stick all sorts of sensors around the house and give you plenty of value adds around that. If you have a leak in your house and you can't see it, and then one day your ceiling falls in, reasonable men can differ over how much it's going to cost to fix it. And this is loss adjusted and all this kind of argy-bargy, and where people start getting a bit unhappy with insurers, and where you hope you've got a good one, it's going to be decent to you and all that kind of stuff. Or someone I know recently there, a little while ago, their house burnt down, which is unlucky. And fortunately, they didn't burn down. And the insurer says, oh, yes, we cover everything. So give us a list of the books and the proof of purchase. Yeah. I mean, I can't remember sort of 10% of the books I own, all that kind of stuff, So this must be a massive change. Yeah. Or you just pay out 200 grand or 2 million or whatever.
Yeah, absolutely. And that uncertainty of what you might have to pay is why insurers really struggle to underwrite flood risk at the moment. If you live in London, as you do on a hill, or you would benefit from civic level flood defences, your flood insurance will be rolled into your house insurance. But we've been out and asked this question to people in Somerset, people in Cumbria, and you get a very different response. Like, my parents don't have flood insurance. I think something like 52% of small businesses in floodplains don't have any form of property flood coverage. And it's that uncertainty that the insurer doesn't know whether they're paying, like you say, 2 grand for new carpets or sort of 200 grand because you had your new stock delivery in that day. Removing that from the equation means that they can underwrite it with much more confidence, and we can help them set the price that they need to. And what that means is that there are, most importantly, no blacklisted areas. We can offer that sort of coverage to the people who need it most. We like to trot out the stat that every year there are about $50 billion of flood losses around the globe. And didn't know how much that is covered? Only $9 billion. There are tens of billions of dollars that need to be protected, as long as somebody can find a way to make it sort of affordable and available for those people who are currently denied it.
So there's a market failure there because one assumes that businesses in floodplains or whole countries in a way like Bangladesh will get sort of hideously flooded and sort of huge loss of life and all that kind of stuff. There's clear market failure if there's underinsured stuff, because quite a lot of stuff is overinsured. For the sake of argument, for all I know, my phone might be covered 3 times in contents or this or that and the other. Or every time I go on a holiday, actually, I was probably covered by something else anyway, yada, yada, yada. So why is there such a market failure? Why is there undercoverage of flood risk in particular, which presumably is one of the reasons why you guys are setting up your new firm? Because if there wasn't a market failure, you'd be trying to squeeze into a busy party.
Right, absolutely. Mostly because flood is a very difficult thing to model, and it's a very difficult thing to understand. And that really spooks insurers. That's the reason that they're happy to, roll their coverage in for you, but as I said, not for my parents, just because they live vaguely near a river. They find it difficult to set the price. One of the things we've always said is there is no actually anything as a bad risk, there's only incorrect pricing. What they're saying is that they don't have sufficient confidence in knowing what their likely losses are in the future to be able to offer that coverage. And that's one of the things that parametric insurance, or this event-based insurance, can be part of the solution of, by meaning that the insurer now knows if there's 20 centimetres of flood, they will now be paying out 100 grand, no more than less. That makes it much easier for them to underwrite. They can be much more confident, they can manage their risk, and we can offer that coverage for more and more people.
And without giving your secret sauce away completely, why has flood risk been difficult to model? And what kind of innovations have happened in the industry as a whole, which means that it's now more modelable than it was?
Yeah, good question. I mean, computing power is the main one, really, because you have to use various hydrological models to think about the flow of water. If you are using like a 50-metre grid of the country or the world, the output you get from that looks extremely different to if you use a 5-metre grid. But using that 5-metre grid requires an order of magnitude more powerful computing.
So it's resolution, it's just like weather forecasts. Weather forecasts have got better because there's more fine data points, but you need a bigger PC to do it.
Yeah.
And you couldn't do it in the past. So flooding as a whole, as you say, is a massive phenomenon, 50 billion or whatever it is worldwide. Are you going to insure all the 50 billion or a subset of that in terms of being your nice little startup?
We're starting off with a subset of that. We're starting off in the UK because that's where we are, but we really see this as a global problem. 80% of the homes in Hurricane Harvey had no flood insurance. You look at like Southeast Asia as well as like another example, like the Thai floods in 2011. I think it was something like $45 billion of damage, and only about $10 billion of that was covered.
I was in Bangkok in May, and they had some huge floods and lots of rains and all this kind of stuff, and there was the usual sort of politicians blaming each other, and Bangkok City Council, whatever, spent X gazillion on flood defences and they didn't really work, and it's all a complete nightmare as it is. So in terms of just sticking with the UK then, so again, there's quite a lot of flooding in the UK. It's quite a big market. Which subset of that are you doing? I mean, as I understand, you're currently in stealth mode. You're launching your first pilot very soon, and next year you're open to the masses, whichever masses you're going for. Which subset of flood risk are you covering, and how can a sort of tiny startup like yours cover the whole UK?
We are authorised by the FCA through their sandbox. We obviously don't have the balance sheet as a startup to hold the insurance risk on our own books, so we're working with a large American reinsurer to do that. But we are starting with businesses, particularly because for businesses, this is a very sensible hedge against the risks that they face if they don't have any existing coverage. And from a distribution perspective as well, most businesses buy their coverage through brokers, and with a new type of product like this, you often want to sort of hold somebody's hand and get them to understand the product.
Yes, and again, thinking of an example from yesterday actually, a firm called Pension B. They aggregate all your pensions together, which is an interesting kind of fintech, is that it's more sort of aimed at sort of older folks than younger folks. There's all this sort of millennial stuff going around about trying to get sort of bearded techies and all this kind of stuff interested, and that's one kind of thing. But one of the challenges that they faced is that they thought of terms that people might Google and found that because people don't know this thing exists, they don't actually Google those terms.
Yeah.
And in the same way, when I left Claremont in 98, I formed my own fintech long before fintech existed, which made it hard to explain what a fintech was. And I had a strategic risk management system or strategic management system for banks. And again, that didn't exist as well. And I found that actually it was very hard doing a type of selling which really doesn't exist. Most people think they want to create something which has never existed before. You've got to be very careful of that, because if you create a new type of ice cream, what have you created? I've got a new type of ice cream. You're in the right ballpark already. All you then need is, I'll lick it and I'll see whether I like it or not. If you've created something which never exists before, it's really tough. It's why it's called evangelical selling, because you've got to sell the gospel.
Right.
Once you've sold the gospel, then flogging the Bible is fairly easy, because actually you're the only person who's got a Bible. So if you say that this is undercovered in the UK and you guys come from being able to model the risk very well, so let's say that you've got a good model for pricing, you've got a reinsurer which is backing you in the background, then it strikes me that a large part of your practical challenge going forward is that a bunch of brokers don't know this stuff is out there, have probably never heard of you, and you're going to have to spend quite a while explaining to them how it works and actually why all these businesses should have it. So is there not a massive education piece out there?
There is a big education piece. One of the funny things that we've seen is there's almost like inverse correlation between how long somebody has spent working in insurance and how quickly they get the product. One time speaking to kind of an old seasoned underwriter who spent, we spend the last 30 years trying to avoid writing flood risk, like why would I do it now? Versus we'll speak to kind of like relatives or people like that, and their response is typically, oh hang on, does a product like that not already exist? So that real difference is really interesting. So those people living in floodplains, the need is certainly there. At the moment, their only option really is to spend thousands of pounds on physical flood defences. And typically, if you do that at the moment, you won't actually see any reduction in premium from your insurer, little or nothing. The great thing about parametric insurance is that if you do that, you can just change the parameter. If you think the premium is going to be too high, you change your trigger height from 20 centimetres to 50 centimetres, just make sure you have enough handbags, sandbags.
Don't worry, I won't edit that bit out. It's always good to humiliate the guests.
Expensive way to do it, but yeah, then your premium will be commensurately lower.
Anyway, I was wondering why you had some sandbags against the door. So that's probably quite a good point to talk about the measurement of this parameter.
Yep.
So let's say my house did bizarrely because of a Noah-like flood. God was very fed up with us all, and he flooded it so much that even the North Downs are underwater. And I never imagined much, so I just insured myself for a 1-inch flood. I'll get my measuring tape out. I go, it's 1 inch. And you turn up and say, no, it's not quite 1 inch. And I've insured myself for 10 million because my house is so amazing. I'm going to be a bit upset. And although it sounds nice and simple that there's an event, again, going back to the real world, what an event is can actually be rather harder to establish than it might be, perhaps. So in practice, how does it do it? Let's say I insure my house.
Yeah.
I go, I like you guys so much, I'm going to insure my house. I don't think it's going to flood, and I want 1 inch. How are you and I going to agree whether it hit 1 inch or not, particularly as water slops around, and actually half an hour before you arrived, it was 1.5, mate. Even though, I know it's half an hour, but...
Yeah, no, that's a really good point. And all parametric or event-based insurance relies on data. You have to use some data to be able to trigger it and decide objectively whether or not that critical threshold has been met. And if you are doing something like earthquakes, you can use like an independent reporting service like USGS or someone like that, who say whether or not an earthquake has happened and report an epicenter and a magnitude.
That's a case where a third party is setting a standard and they say Mayfair was hit by a 3.94 on the Richter scale.
Exactly. And, if you're doing something like wind, you could use like a wind station that's like 50 kilometers away. And that's fine with wind, because if it's windy 50 kilometers away, it's probably going to be pretty windy where you are. But with flood, unfortunately, you can't do that. If you're on a slight hill, I might be underwater while my neighbour is soaking wet. So we have to measure the hazard really at the point of the insured party, the insured business or insured home. So that's why we've developed our own sensor. So we install that on the side of your premises. That logs water depth. If it registers that it's breached that critical depth, it sends us a signal, and then we send you the payout immediately, no questions asked.
Is this some kind of smart device then or something?
Depends on your definition of smart, really. It's connected. Obviously, Wi-Fi is likely to go down in the event of a flood.
I was coming around to that.
It uses mobile phone networks rather than Wi-Fi.
I see, and I don't really like encouraging fraudsters, but what happens if some person goes and pees on their event sensor and your sensor goes, oh, I'm wet, and then I suddenly get my 10 million from being a naughty fraudster?
No, that's a very good point, and that's often one of the first questions we get asked by...
What, peeing on the sensors? I thought it was only rude people like you.
People normally phrase it a bit more eloquently than you might.
Pour a glass of water on the sensor.
Yeah. And that is part of our sort of secret sauce, as it were, and that is part of the sort of patents that we're filing for in the sensor. But there are basically both primary measures in the sensor itself and secondary data processing measures that we can use to work out whether or not it is a flood and not somebody just pouring their water on it and something like that.
Well, again, going back to a data-driven world, if I join your pilot programs and I install this, and then in a month's time I say, hey, Adam, you know what, I'm flooded. That's amazing. I said it never happened. You can presumably look at your computer and go, no, it's not flooded. You're 1,000 feet above it, and there's like 1 millimetre of rain in the valley. So,
absolutely.
As you say, in the case of wind, the parameters are general, but also there are parameters around floods.
Yeah.
I mean, if you're watching the 9 o'clock news and there's floods all over the country, well, maybe there's floods happening. If there ain't any floods, then you're not in a floodplain.
That's probably an interesting point to kind of, I guess, tell the story behind something that was the real sort of inception of the idea of flood flash, which is, so in our past life, both Ian and I used to work on modelling the structures on something called catastrophe bonds, which are basically reinsurance contracts essentially, but they're structured as debt in some sort of Bermudan shelf company, which allows sort of pension funds and people like that to provide the insurance. And it's a great investment for them because it shows such low correlation to traditional investments. So during Hurricane Sandy in 2012, if you think back to that, the MTA, New York's equivalent of TfL, their tunnels all flooded and they experienced huge losses. The industry losses of something like 20 billion, about a quarter of that was the MTA. Their insurers got burned as well because of that uncertainty that they talked about. They hadn't really realised how much they could lose, and though people were very, very reluctant to cover them again. So what the MTA did was they turned to the capital markets and issued a parametric catastrophe bond. And what that says is that if water levels as measured by a tide sensor at the tip of Manhattan hit levels over 8.5 feet, i.e. a Hurricane Sandy-like event, investors in this $200 million bond lose their money, and the MTA can start using that to pay off their claims. So they were able to use parametrics to gain insurance that nobody else was prepared to give them. They can now be paid objectively, and that water level measurement and that data is used to trigger that.
You mentioned patents and your sensors and all this kind of stuff. Are you getting hardware manufactured which is then installed by folks, or do you go down to sort of Robert Dias and buy a flood sensor and just glue it on the wall?
Certainly for Mark 1, we do the installations. Yeah, much like Sky TV.
And they're your sensors, are they?
There are sensors, yes.
Right, okay, so I am much clearer about event-based insurance or flood insurance or parametric insurance now than I was, Adam, which is good news. And like many things, it's neither hideously complex nor trivial. As usual, the principles of it are fairly straightforward, but as always, in terms of how hard can it be, well, there's quite a lot of I's to be dotted and T's to be crossed, although I can really see that actually you need some sort of simpler language around it. I think it's a very simple type of insurance contract in that based on some objective event, you pay out X pounds, which is a darn sight simpler than, it's going to cost this much money to get my flood damage fixed when my house has sort of leaked and all that kind of stuff. So before we wrap up and talk a little bit more about you guys as a firm, as the astute listener, and that's all of you, of course, will have heard, you may have noticed that the London FinTech podcast is now in its second year of brand partners. I'd like to thank my first year brand partners who are moving on, Archover, for their support. They're not far off hitting the £50 million lent in total, which is a great milestone. And also Synchron, who shall probably remain for all time the only firm I ever meet who grew from thousands of staff in 18 countries and 9-figure revenue worldwide without raising any external debt or equity. Bear that in mind when you get too impressed with Series A, B's and C's announcement in the text press. So, a new sponsorship year, and mostly, but not all, closed. In large part, as even though I, like most of you, get older every day, I clearly get no wiser. So a couple of months ago, I thought it'd be really nice to have an incumbent as a brand partner, and one or two are very enthusiastic and actively on the case. Those of you who are in B2B sales will recognise this may take some time, as I've also mentioned on the podcast. And also in passing, quite a few fintechs have corporatised in the meantime, so the gap between B to fintech and B2B sales is narrowing. However, I am delighted that Will and my friends at Smart Pension are continuing to support this noble venture. I thought that auto-enrolment, having now become mandatory in the UK, they'd be sitting back with feet on desks smoking cheroots. But no, exciting plans are in the offing, which I hope to share anon. If on the one hand I don't learn, on the other hand I do sometimes. So my other fintech of the year last year was Blue Motor Finance. And I'm delighted to be waving the flag for them too going forward. As I say, I do learn, so expect 2018's New Year episode to have 42 joint fintechs of the year, and next autumn for me to have 42 sponsors. It may take some time to get through the brand messages, but never mind. Bob Jones, the CEO of Blue Motor Finance, was on the show last year, and as well as reporting on Ringo's first gig drumming for the Beatles, told us of many of his business secrets which have been repeated many times over. He sure walks his walk, as about a year later, they have burnt their tech to the ground, roughly speaking, and something crazy like 10 times better in response time than they were then. And then they were 10 times better than the competition. So never be complacent. So before we ask you, Adam, about Flood Flush, I'd like to thank all the listeners out there for tuning in. I met quite a few of you at Lendit. I was particularly pleased to meet Alexander, who was the first person ever to want a selfie taken with me, which I was very pleased to show my daughters that actually I'm not as boring as they think. And I'd like to thank my new brand partners for the podcast. Blue Motor Finance combine extensive experience with a fresh and innovative approach. Blue's award-winning technology has supported over £500 million of lending to over 50,000 customers. Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. So, Flood Flash then, Adam, just wrapping up, we've touched on you off and on. You guys, I think, sort of left your day jobs last year and have been on the case this year, and you're just going into pilot and you're living in the sandbox and you're launching more generally next year, so it's clearly a time of excitement and lots of work for you guys. So what's going on in the background, and then going forwards, chuck some crumbs on the water for the kind of folks that should be sort of looking to chase you right now or chase you next year?
Yeah, absolutely. Thanks, Mike. Yeah, as you say, we're in sort of relatively stealth, sort of clandestine mode at the moment. The website is relatively locked down, but we think this parametric insurance can be a huge part of this flood insurance problem that we've spoken about. We sometimes refer to sort of traditional insurance as almost being like the postal service. It's a valid purpose for sure, and for many people it's fine, but there's paper, there's someone coming to your door. Will it come today? Will it come at all? There are flood claims from Sandy still being settled now, like 5 years later. Whereas parametric insurance like Flood Flash, is email. It's a step change in the way to think about the product. Humans, paper, removed from the equation, and you're left with a sort of an instant delivery, more affordable, 21st century alternative that you can reach people everywhere with. So we're moving towards that goal. We've got our pilots up and running. We're authorised through the FCA sandbox, and we're looking to launch fully next year. In advance of that, we've not been thinking about investment thus far, but we will start thinking about that over the next couple of months.
So people who've got money that want to invest in this kind of thing can come and knock on your door.
They can come and knock on our door.
They can come and knock on my door as well, as I've got one partner left to nail down. And I've never had a sandbox before on the show, in large part because I don't tend to do startups. I tend to let sort of nature and evolution find out which the tall poppies are and then talk to them when they're tall poppies. But I thought you were a very interesting proposition, and it makes the change to mix it up. So when you mentioned the sandbox before, I thought of asking the question, so how is that? But then thought you're probably going to say, oh, it's wonderful, because you can't say, oh, it's terrible, because that probably wouldn't affect your relationship with the regulator. So is there anything you'd like to say?
No, it's very valuable. It's for startups. It's a much more rapid process for going through the regulatory environment.
And there is presumably a transition phase, which perhaps not that many firms have been through, which is from the sandbox to the sort of kind of the grown-up playground.
Exactly. So at the moment we have certain restrictions placed on us, which basically affect the number of policies we're able to write and the size of those policies, which fit nicely with our pilot that is up and running shortly. But most of the hoops have been jumped through by this stage, so we will eventually apply for what's called a change in permissions, and then we have our full authorisation from that stage.
Well, I'm very pleased to hear that. Well, for two reasons. So, firstly, the FCA and also the Bank of England, have these schemes, and of course these schemes are good things, and nothing I say will go against that. Secondly, however, in a world of PR and all that kind of stuff, folks like me tend to read some spin and I sort of roll my eyes. They would say that, wouldn't they? And we're here to help and, all this kind of stuff. In a way, they are. But it's really good to hear that in practice there is a process which is working, it is valuable. I think the other thing that it really helps is you get to know their mentality and what they need to do their day job properly.
Yeah.
They get to know you when you've still got your little sort of training wheels on and all that kind of stuff. And both sides can reach a level of comfort and kind of grow together.
Absolutely. And I think fair play to them for realising that regulation and innovation often are at odds. The sort of initial investment to get a startup off the ground in the financial services is very different to sort of consumables. We can't go and rent a stall at Borough Market for a week and see if people want to buy our insurance product. So helping people to get through those hurdles is a must-do.
Excellent. So that's the sandbox, and that's the way forward from the sandbox. We mentioned funding, so if people want to come and knock on your door and give you money for huge stakes in your company or tiny stakes in the company, I'm sure you'd listen to them. In terms of needing more sex, drugs and rock and roll, what are your 2 or 3 categories?
Yeah, well, all of the above. The conversations we're starting to have as we expand from our pilot scheme to around the UK. Broker networks are the people we're just starting talking to now. So those are very valuable contacts to actually distribute the product. And it can allow brokers to offer a sort of now full suite service to those customers who before they had to exclude flood for and leave them unhappy.
It's an interesting thing because it occurs to me that many times certain fintechs have to interface with quotes the real world all over the country, people getting up and walking around and all that kind of stuff all over the country, and have to build up a large broker network for themselves. And it certainly applies to both Smart Pension and Blue Motor Finance. When they're both on the show separately, they were talking about that, and a large part of their success has been precisely building up broker networks, interfacing all this digital shiny stuff with actually the real world of people's day-to-day jobs and the networks of human beings that exist out there. And we were at Bulletin Capital InsurTech evening when we mentioned before, and the similar thing was there, which is that, you speak to some InsurTechs and they certainly need to reach out to the broker network. So it occurs to me that actually there is a gap in the market, or somebody I haven't come across, which is a firm which will interface between fintechs and broker networks.
Yeah.
Almost like a broker for the brokers.
Yeah, absolutely. And on the distribution thing, one of the things we notice about a lot of the sort of buzzy InsurTech events that we go around is that there's a huge number of companies trying to solve a distribution problem. They're trying to send on-demand insurance through an app, that type of thing. But we are not at the moment pretending that that's what we're doing. We're not pretending that we are a distribution disruptor. It's the fundamental insurance product that we think we are doing something different in.
Excellent. Right. It's very interesting to hear about. I wish you every success in the future, and I hope it goes well, Adam.
That's very kind. Thanks so much for having me, Mike.
Thanks for listening. If you have consulting, advisory/non-exec, or media needs in the FS or fintech space, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a band there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moon ride, watching a happy moon ride. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. Wave the city goodbye. Watch the firelight dance with me. 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 Watch the firelight